Bro, literally everyone thinks the stock market is going to crash. Every time I scroll through TikTok, YouTube or X, whatever it is, it's all the same message. This bubble is bigger than 2008. Sell everything. The tech bubble is gonna pop. And honestly, when you hear that enough, you start to question yourself. You start wondering if you're stupid for even investing right now, or if you're about to lose all your money the moment you buy in. I get it, because when I first started investing, those headlines scared me too. But here's the thing, I'm 19 years old with a $42,000 investment portfolio, and I didn't get here by listening to doom predictions. I got here by understanding how the market actually works, and by focusing on what I can control, not on what every fear-based creator on the internet is screaming about. Let me be honest with you, people have been predicting a market crash every single year since the stock market was invented. Literally, if you go back decades, you'll find the same articles, the same videos, the same "this is it, everything is about to collapse." And do crashes happen? Of course they do. They're supposed to. But here's the part nobody tells young investors. The market has survived every crash in history and still reached new highs. Every single time. That doesn't mean investing is easy. It means that fear is exaggerated, recycled, and repackaged, all for views. The reason everyone thinks the market is about to crash is because fear spreads faster than facts. A calm, rational explanation of how markets work don't get 10 million views, but someone yelling at you to sell everything does, because fear is like emotional knowledge. Fear feels like someone is warning you. It makes you feel like you're gaining insight, when really you're just being emotionally manipulated. And honestly, that's one of the biggest reasons new investors panic. They're not reacting to the market itself, they're reacting to other people's fear about the market. Something that helped me early on was understanding this simple truth. There is never going to be a moment in your life where the market feels safe. There will always be a new crisis, political tension, inflation, interest rates, housing crashes, layoffs, debt ceilings, elections, global conflicts, supply chain issues. If you wait for the perfect moment to invest, you'll be waiting forever. And meanwhile, the people who ignored the noise, stayed consistent, and bought into the market over time, they're the ones who actually build wealth. When I was first starting out, I kept seeing videos telling me to stay in cash, or to wait for the recession, or the S&P is about to collapse. And for a while, it kind of messed me up, I won't lie. I was terrified to put money in. But one day, I looked at the chart of the S&P 500 from the 1900s until now, and what shocked me wasn't how many crashes there were. It was how small they look in hindsight. The crashes that felt world-ending at the time aren't even noticeable when you zoom out. All the fear, all the panic, and all the headlines, they turned into tiny dips on a long upward trend. And that's when everything clicked for me. The people who lose money aren't the ones who invest during bad times. They're the ones who stop investing because they're scared of these bad times. Here's how I personally invest, even when everyone says a crash is coming. First, I don't try to time the market. I don't sit here predicting when everything will fall apart. I'm not waiting for the bottom. Trying to time the bottom is like trying to catch a falling knife while blindfolded. You're never doing it, bro. You only know where the bottom was after it's already passed. Instead, I follow the simplest strategy. It's literally so easy. I invest automatically. Every time I get paid, it removes the emotion. I don't second guess myself and I don't panic. I buy into the S&P 500 consistently because historically that has outperformed almost every active strategy for the average person. If you don't have time like me, just do this and you're literally chilling. You can do this with any ETF, whether it be QQQ, VTI, etc. Doesn't matter, just do it. This is what kept me sane when everyone else was freaking out. I realized that the biggest threat to my money wasn't the market crashing. It was me hesitating. It was me pausing investments because some random guy on TikTok said that the crash was coming next month. It was me overthinking instead of doing the one thing that actually builds wealth, staying consistent. So that's my first step. Stay invested, stay consistent, and ignore these random predictions. The second thing I'm doing is focusing on my income, not the outside noise. Most young investors think the key to building wealth is picking the right stocks or timing the next crash. But the truth is, the most important thing you can do is increase your contributions. If you're putting in $50 a month, a crash barely even matters. If you're putting in $500 a month or $1,000 a month, that's when wealth starts building. And ironically, downturns become your best friend because you're buying everything at a discounted price. Let me add a deeper perspective here for young people. A crash is not something to fear, it's something to welcome. A crash is a sale, a once-in-a-decade opportunity to buy assets at massive discounts. But most people miss this opportunity because they're too scared to act. They wait for the market to stabilize, which really means they wait for prices to go back up, which means they buy high once again. And they repeat this cycle every time. Fear makes people do the opposite of what literally works. Now, somewhere around this point, people also ask me, but what if this time is different? What if this big crash is the end of everything? And look, it could be. We might see a recession. We might see a dip. But here's the truth, even if this time is different, the strategy stays the exact same, because trying to outsmart the market is how you're going to lose. Staying invested is how you win. No one in history went broke because they consistently bought into the S&P 500 for 40 years, but plenty of people went broke trying to avoid small crashes. There's something else I want to talk about, the mental side of investing, because the reason that most people hold themselves back isn't logic, it's literally anxiety. It's constantly checking their balance. It's seeing their portfolio drop and feeling like a failure. It's comparing themselves to others who got rich faster. And that mental struggle becomes even harder when everyone online is predicting a random disaster. But something that helps me a lot is treating investing like going to the gym. You don't build muscle by checking the mirror every 10 minutes. You build muscle by showing up consistently, being patient, even when it doesn't feel like anything is happening. Investing works the exact same way. Consistency over intensity. One of the biggest turning points for me was realizing how much of the market's fear cycle is psychological, not financial. When people say the market is going to crash, what they're referring to is insecurity, fear about their job, fear about inflation, fear about the future in general. These emotions get projected onto the stock market because it's an easy target. But when you separate emotion from strategy, everything becomes clearer. I started reminding myself that a crash doesn't erase real companies, real workers, or real innovation. A crash doesn't erase the fact that people still buy food or use technology or pay for stupid services, drive cars, stream content, go to school, or need healthcare. The economy doesn't disappear in a crash. It slows down temporarily, but actively continues and eventually picks everything back up again. Understanding that made me look at crashes differently. They weren't disasters now, but they were temporary storms. And if you stay calm during a storm, you'll come out stronger than the people who panic sold, that's for sure. So here's what I'm actually doing when everyone says a crash is coming. I'm staying invested, I'm increasing my income, I'm keeping my expenses low, and I'm staying focused on the long term. I'm not pulling my money out, and I'm not waiting for the perfect moment. I'm not letting fear control my decisions, because at the end of the day, the market rewards patience and not panic. And the final thing I'll say is that you don't need to be perfect to win. You don't need to predict anything. You definitely don't need to be an expert. Look at me, I'm literally just some random 19-year-old. You just need to stay consistent when everyone else is scared. That's literally it. And if you do that, I promise you, you will be so much further ahead of the people who keep waiting for the crash that will never come. Because the truth is, everyone thinks the market will crash, but almost nobody knows what to do when it actually does. And that's why I stick to the most boring strategy on earth, because boring literally wins. Boring compounds, and boring builds wealth quietly while everyone else screams about doom. That's exactly what I'm doing, and honestly, it's the reason I'm 19 with $42,000 invested, and the reason I'm confident I'll be financially free long before most people my age. You don't need predictions, you just need a plan, and you need to stick to it, especially when it feels uncomfortable. Remain simple, and good luck.